Hello and welcome to CNBC TV18. Wishing all our viewers a very happy, healthy and prosperous Diwali. From all of us here to all of you there, wishing you all of the wealth and all of the happiness in the coming year. We're starting a new Samvat and it's always a happy occasion, the most auspicious time of the year. I'm Prashant. With me in the studios, my colleagues Sonia and Nigel. Guys, hi. Happy Diwali.
Happy Diwali, Prashant. Happy Diwali, Nigel. And to all our viewers watching us right now, wishing you only health this year, because we've learned that in the last 2 years, there's nothing more important than health for you, your families. Everything else, of course, is secondary. And this has been such a great year, right? I think after 2 or 3 years, we're celebrating Diwali in full throttle in its entirety. And it feels amazing to just go out there, meet people, enjoy with your families. I think it's only gratitude that, one can feel this year.
Well, thanks, Prashant. Thanks, Sonia. And greetings to you and your families as well. And to all our viewers. Well, for me, it's extra special, right? It's my first Muhurat trading that I'm out here.
It is.
For the last 10 years or so, I was always hoping that you guys take that one, you do that Muhurat to Muhurat, Samvat to Samvat. And at times you'll skip it. So I've tuned in for the last many years, and I'm very excited to be here. My first Muhurat trading on the #1 business news channel here in India.
And I'm sure the first of many to come. So happy Diwali once again to all our viewers. It's the first day of the new year, and ahead of the Muhurat opening, we have plenty that's lined up on the show for you. To tell you, of course, what to expect. It's been an exceptional year for India, given all the challenges that we've had to deal with. And we have a lot of market voices, including the best of the best. Ramesh Damani joining in just a while from now. You have Atul Suri, you have Samir Arora. So it's an action-packed next 1 hour where we're going to ring in all the festivities. And it's one of those auspicious days, right? When you go ahead and take that one token trade, expecting your year to be phenomenal. So I guess let the games begin.
Did you guys... at my home, the tradition is to do the puja sometime in the afternoon, little after the afternoon, and then kind of, rush to office for the Muhurat session. And I think a lot of people who are watching, brokers, exchange members, even clients, who want to go to the broker's office to put in that one token trade. I think that is tradition. It has always been tradition for many years now. Absolutely, I think it's a traditional 1 hour of Muhurat session.
Auspicious day.
Absolutely.
Absolutely auspicious. For me, I think the last 2 years, what I really missed was bursting crackers in the building, So just this year, it was so special because those fountains and all the lights and the firecrackers and then your children playing.
Yeah, they love those sparklers.
The sparklers. I think it's phenomenal and I can't wait to sort of wrap this up and rush back home and do that. Nigel, what about you?
Well, that's right. We have our puja that's due as well, so go back to that. And the kids, they're going to be so exciting. I got a 2-year-old and 4-year-old, so the 2-year-old has never seen anything like this. She's trembling. So it's going to be a special evening. So we get through this 1 hour of trading and go back home. Unfortunately, we'll come back tomorrow before getting a break again on Wednesday. Normally, you get a follow-through, right?
That's the only sad part. Every year after Diwali, the day after Diwali, you sort of get to rest.
Yeah.
But this time around, it's different. But, Prashant, there's so much happening in the market as well, right? We have a slew of earnings to react to, largely good numbers, whether it's ICICI Bank, Kotak Mahindra Bank, Reliance Industries will be acting. And then there's the global cues as well.
There is, so much over the last 2-3 days. There is US, there is UK, there is a Rishi rally. Rishi Sunak is probably going to be the next Prime Minister. And there is, of course, China, right? So let me just quickly run through. By the way, the pre-open rates are coming up on your screens and we should have that. It's solid. 170 points higher. We are at 17,746 and it's a 550-point move on the Sensex. And why not? So let me just quickly tell you what happened. We are coming and reacting to the big rally we saw on Wall Street. US markets went up 2.5%, the S&P and the NASDAQ. You had yields, which have been the problem area for the market. They've been going higher because of what the Fed is indicating. That fell 20 basis points. They're still high, but from 4.75, now they're back to 4.45. There were 2 triggers, and this is important. One is, there was a WSG article by the economics editor, who's also known as the Fed Whisperer, because, whatever he puts in his articles comes true. And he basically said that the November meeting, he basically said that you will see a 75 basis point hike in November. That is a given. But he said that the November meeting could act as a staging ground to lower what they will do December onwards. So December may not be another 75, it could be 50, it could be 25. That was reason number one. And then we heard from a regional Fed president who basically was very, very dovish. He said Fed should not over-tighten, and this ongoing pace of hikes, which is 75 at every meeting, may not be needed. This week, the next many days, is also very important because about 50% of the S&P reports earnings, including the mega tech companies, right? And that is always a huge mover for Wall Street. So that is one. Let's come to China next. What has happened in China today in terms of the market reaction to the Chinese president tightening his grip there is actually very consequential. Markets don't like it. So President Xi in China is sort of re-elected for the third time, re-elected now. He's now sort of a core leader. That's a designation. And look at the market reaction. This is the first reaction to what came out of the party congress and the appointment and the reshuffle in the top leadership. The Hang Seng Tech Index down 10, Hang Seng down 6, the FTSE China A30 Index down 4, and the currency fell more than 1% against the dollar. This, once again, this is important for no other reason that it maybe gives hope that, by the way, Chinese markets are down big time already. But the fact is, if China is becoming really uninvestable, and we've kind of discussed various emerging markets which are in trouble, and India is looking very, very good, does this put India in a much more favorable spotlight? And this is important, right? Because, I mean, you know, we like it, we don't like it, not we, but markets like it, don't like it. The regime in China is staying for another 5 years, right? So that is the number two. And number three, of course, is what is happening out of the UK. After all the tumult we've seen there, it looks like, you know, we'll have Rishi Sunak. By the end of the day, the confirmation will come as the next Prime Minister. And maybe he will spark some stability once again, not just for his country, but for global markets, etc. as well.
Okay, well, for one thing is for sure, right? There's stability in our own markets. I mean, just look at the numbers. ICICI Bank, Kotak Mahindra Bank.
Absolutely.
Much above street estimates and firing on all guns blazing in the banking space. And of course, Reliance Industries as well, doing quite well with both its geo as well as retail businesses. So let's do one thing. Let's welcome our first guest on the show. We have Ramesh Damani, who's joining in. And Ramesh, first of all, happy Diwali to you, to your family, to your entire team. It is a year filled with gratitude, right? There's so much that's happened and we have come largely unscathed. So glad that you're with us here on this Muhurat session. How are you feeling this time around?
Thank you, Sonia. Thank you, Nigel. Thank you, Prashant. Happy Diwali to all of you and all your viewers. You're right. The year has been filled with gratitude, a little bit of joy, but also for us, a little bit of sadness because one of our dear friends, as you know, passed away this year. So it's a mixed bag. But overall, the mood on the last street is buoyant. And I think we are more optimistic about the next year than we've been in a while. So I am hopeful going into this Muhurat session, Sonia.
Mr. Damani, great to speak with you as always on the Muhurat session. Happy Diwali, Prashant here. You know, Mr. Jhunjhunwala will be missed, won't he? And I think on a day like today, when he was always there to share his nuggets of wisdom and kind of share his experiences, I mean, you miss him more. But I think the message resonates very, very strongly, which is look at the long term and stay bullish, isn't it?
Yeah, absolutely right. I think, of course, we'll miss him. Diwali and budgets were a fixture for Rakesh, and he was always so prescient about his calls on those days that we truly miss him. His band of friends really miss him. But his underlying message, I think, has now gone through to the Indian audience that it's your time in the market that's important, not timing the market. Stay bullish on India, stay invested, ride the highs and lows. I think these are all the lessons we learned from him. And, you know, I hope the younger, newer set of investors will learn the same lesson, that this is not a gambling casino. This is not a get in, get out, make your money. If you want to create long-term wealth, you need to be long-term in the markets.
Hi, Mr. Damani. Greetings to you and your family as well. Nigel on this side. Well, you know, yesterday Virat Kohli sent the entire nation into a tizzy with that innings. You know, the last year or so, it reminds me of a Rahul Dravid sort of innings. Because we had plenty that was thrown to us, but the Nifty is more or less flattish at the end of the day. So it's important to get our eye in. Now, given the fact that you're sounding optimistic about the coming year, do you think it's time now to, you know, open up the shoulders, play the long handle, maybe hit it out of the park? Are we bracing for a rather good year? Maybe double-digit returns on the headline index?
Well, let me just put in perspective, Nigel, and happy Diwali to you and your family. I think in the last few years, the world has shifted on its axis, and we've not realized that. I think we came to the markets in the late 80s when the Berlin Wall was falling, and you had an era of low interest rates, low inflation, globalization. I think that is about to change. The two great benefiters of globalization, the whole world benefited, of course, but the two great benefits were China and India. China and America. America is the consumer and China is the producer. And in a corresponding way, Russia, because it's the largest producer of commodities in the world. Now the world has changed. The partnership between China and US seems to be destroyed. And I think it's more important that we'll have an access coming up from China, Russia, as a commodity producer and a commodity user. But the world will be looking for alternative sources. And I think India, with its large domestic economy, relatively small exposure to global trends, relatively small exposure to global supply chain, stands to benefit. So I think if you told me, for example, that the foreigners would sell $30 billion last year and we'd still be within break-even of the index, I would have taken it as you've said. And I think that's exactly what's happened. And now, once the vicious circle of selling goes away, replaced by a virtuous cycle, the FI seeing the growth in India, come back and invest in India, I think we're setting up ourselves for hopefully a Virat Kohli type of year.
Okay, in fact, you know what? We have to take a short commercial break, but it's befitting the kind of move in the market. Looks like the new Samvat is going to start on an absolutely positive note. So do stay tuned in. We'll be back in just minutes from now. Welcome back, and once again, here's wishing all our viewers a very, very happy Diwali. Hope this is the best one yet for you, your families, and for, of course, your businesses, your work. It's been a challenging last couple of years. In about 30 seconds from now, we'll have the first token trade on the Samvat session, and the indications are that it'll be a bright shade of green. The Nifty is up 160 points as we speak. Good numbers from the likes of ICICI Bank. That's the first tick over there. The bell getting rung at the Bombay Stock Exchange, and that token trade, it's a very auspicious day. And the first tick is well in the green. Look at that, 1% higher on the Nifty right now. The Sensex up 620 points. ICICI Bank is roaring from the front on the back of good set of numbers that the company has reported. Bajaj Finserv, SBI Life, Tata Motors, HDFC, Asian Paints are the other stocks that are not too far behind, up about 1 to 2%. It's a banging opening, you'd have to say. The only stock that's perhaps not participating is HUL, post its numbers. That one's down about 3% Reliance as well. It was a mixed bag this time around. The consumer-facing businesses are doing exceptionally well. However, oil to chemicals is not that great, but Reliance Industries also holding up onto the green line. So that's the Nifty for you. The first token trade on this Diwali session, the auspicious day, has opened well in the green, up almost about 200 points on the Nifty, and there's plenty happening in the broader market.
Well, that's right, Sonia. I know quite a few stocks. I don't know whether it's token, but there are some large volumes in there. Max India, the stock is up 20%. I think we should pull that one up. You have Saskin Tech, that one's up and about. You have D-Link, that as well. I'm just pointing out some of these stocks because the volumes are rather large on these. One, Orient Paper, well, massive volumes out there for a motor trading session. And South Indian Bank as well. Remember, there was some promise out there. That one as well up close to around 6%. So plenty of action from the broader markets as well. And we had a off day, so we're catching up with what the US markets did, and that explains why we're up close to around 200 points. The Nifty Bank out of the blocks, well, it's up close to around 500 points. So good start, Prashant.
I mean, absolutely. No two ways to sort of describe what's going on. We're at, what, 17,765. By the way, was that Ajay Devgan, guys, on the screen at the BSC?
I did not notice.
I think I saw it. I got a small glimpse and...
Movies, markets, malt.
If it's Virat Kohli, then I'm interested.
Actually, we should have started this the chat with...
anyone else.
Nigel spoke about it, but I think we should have started with cricket today. I mean, what a match yesterday.
Champion.
Well, it's all green, so let's put it that way. And we'll get down to specific stocks, etc., in a bit from now. More stocks, etc., in a bit from now. But 180 points, it's a solid start. Ramesh Damani, of course, is still with us. Ramesh, thanks for waiting. Just a quick word. I mean, if you've been following what's happening in China with that party Congress and, President Xi re-elected, etc., does it in a way solidify expectations that, you know, the Tina factor within emerging markets? I may be exaggerating here to make a point, but do you think, I mean, it does shine the spotlight on India in a much better way now with what's happened? I don't know if you've seen the Chinese stock market reaction absolutely in the dumps today. Go on.
I didn't see the reaction, but I agree with you that you're not overstating the case. I think there's as I mentioned earlier, the Earth has shifted on its axis, and I think China for 20 years has been the one source destination for FDI investment, for stock market portfolio investment, and the whole relationship between US and China was built post-2000, China entering the WTO. I think that's changed, you know, and I don't think that it's coming back in a hurry. And China's moved closer to Russia now, so it would be that those two will be helping each other. So the Western democracies, Europe, America, will be looking more and more towards India. So that is the base case for India at this point. The reason a lot of analysts are saying that this is set to be India's decade, this is set to be a 10-year bull run, I think that's part of the logic that we're using, that we have a stable body politic in India, we have reforms that have been going through, and the bull market that started when the finance minister cut the corporate tax rate is alive and well. I mean, it tested it during the COVID lows, it broke that, but just briefly. So it suggests to me that the bull market that began almost 3 years back in September is probably well and on way. And I think part of the logic will be more clearer later on, but will be that China is no longer a dominant attractor of capital flows in the world or a dominant taker of intellectual or oxygen space in the world, that India will now gets its fair share.
Okay, that's interesting. Ramesh, you know, we were just having a conversation with S. Naren on our sister channel, and he made a very interesting point. He said that for the longest time, I've never recommended gold and silver to investors, but this time is different. When you're doing your asset allocation for this year to next, I recommend you put some amount of it in gold and silver as well, because it's looking attractive. Do you believe that the time has come now to sort of shift a little bit away from equities and into other asset classes purely because of the challenges that we're dealing with globally?
Sonia, I beg to disagree. You're looking at we are hoping for a 10-year bull run in equities in India. Why would I buy gold, which pays me no dividend? It won't even tickle me back. So I'm very clear that I want to remain invested almost fully in equity. I don't even like FDs at this point because inflation may eat up into your returns out there. So you want an asset class that will outperform inflation and plus give you a dividend. So I think that gold may be a fear factor, may rise a little bit here and there, but I think most investors are far better off owning equities. Very clear about that.
You know, Mr. Damani, I'm following what you're saying. I don't miss a single SIP on a month-on-month basis. I believe my kids are going to have a good run, say in the next couple of, maybe in the next 20 years or so. So equities is the way to go. And you're pretty clear about that. But from this Samvat to next Samvat, you know, what do you believe is the big theme that could play out, Mr. Damani? You know, you've hinted in the past that defense could be one sector that will do well. The financials are well placed as well. If you had to pick on a couple of big themes, what would they be?
Nigel, that's what I spend a lot of my time thinking about. I forget.
But you could share some with us.
But some intellectuals said, yes, I will. There's some intellectual who once said that everyone is entitled to their opinion, but they aren't entitled to their facts. The facts are common. And I've been, on the receiving end, a lot of derision sometimes for betting on the PSU stock. And I'm so happy that we've been vindicated by these defense stocks and the enormous run-up that they've had, which we've been well invested in. May I suggest for your consideration that you can look at the railway PSUs. I think these stocks are, as cheap as the defense stocks were 2 years back. They all trade at single-digit multiples. They have a 5-6% yield. And I think what the public will understand in a while, especially after the budget, is that it's a very blunt axe. If the government wants to increase capex in the country, want to increase transportation in the country, want to increase infrastructure in the country, they will express it through these railway companies. That's the only vehicle that they have. And I'm astonished at the valuation of these companies. And I think people who were divisive about the defense stocks, for example, will now be open and take a second look, because what you'll find is what we love in the last street: bargains, bargains, bargains. So that would be one sector to look at. I would also take a contrary bet on technology. I think it's a bit unfair what's happening to technology. These are great businesses. Look at over a 5-10 year perspective. Forget 1 year perspective. I would take a bet on technology.
Sorry, Ramesh, you said defense, of course. I mean, I remember when you had come down to our studios many months back, and I think the rally pretty much started that day, and stocks were up 100, 150% from that point on. Sorry, you said, I missed that, a sector is as cheap as defense now. Are you referring to PSUs? Other PSUs?
That's the railway PSUs. You know,
Railway
look at
PSUs.
the basket
Okay.
of railway PSUs, because these are the blunt instruments the government is going to use in order to express their capital expenditure over the next few years. So I think there's a great opportunity in those stocks.
And we've got a few listed, and I think there are more coming, making their way to the public markets in that particular space.
I
And
think
of course,
there
you
are
said
4 or 5 listed. I can name them. There are 4 or 5 listed. I'll name them, but I'm not recommending any of them. Railtel, RVNL, RITES, to name a few, IRFC, to name a few. I think if we just go and study those. I mean, you know, you may not want to buy them, may want to buy them. That's a call. But I think as an analyst and as a value picker, you owe it to yourself to at least go through and study them.
Okay, by the way, the financials are really ruling the roost this evening. So you have not just ICICI Bank, that's up almost about 2% right now. You have a couple of other names as well. HDFC is topping the charts, up 2%. HDFC Bank, Axis. This whole space, Ramesh, has done exceptionally well. You know, this earnings season has sort of confirmed the fact that credit growth is back, asset quality is stable. But is it becoming too much of a crowded space now, this whole financialization theme? And even investing in banks. And what's the way forward here, you think?
I heard you say that, Sonia, in one of the other programs you did, that it may be a crowded trade. I don't think so. This is still the early innings. I think, you know, as someone else pointed out, that to get a bad NPA cycle takes 3-4 years after a good NPA cycle. So, you know, I think it may be a bit more popular, especially on television channels, but I think it probably will make money for investors.
Okay. Ramesh, before we let you go, you know, this has been a really strange year, right? I mean, it's a year in which you've had highs and lows, and a lot of retail still has this FOMO feeling. What's the sense you're getting? Because we're what now, 5-6% away from 52-week highs. Do you think that it's a market that will move one way up, or are we looking at some sort of a time correction, if not a price correction, purely because of the challenges that we're facing globally?
You know, Sonia, for 30 years, we've always faced challenges. If you go back and look at what has happened in over 30 years in India, you wouldn't invest in India. So that's part of the course. Having said that, I'll stick my neck out, and I said the market will make new highs in the next 2 quarters or so. I think it's poised to make a new high. And to answer your question, what should retail investors do? I think the best time to invest was yesterday. The second best time is today. You need to go ahead and invest. And I think they are understanding their message finally. The money is coming through steadily and slowly. They're remaining committed despite global turmoil. India sometimes is now offering a beacon of stability in a violent world. And like I told you, the old rules of the world have changed. We're going to move into an era where China will not attract so much oxygen. India will attract its share because of its size in emerging markets. Anything in quantity you want, you have to come to India. So, you know, I remain quite hopeful, and I think the retail investors are agreeing with me this time. We've often talked about how they've been avoiding the Indian market, much to our detriment. And I think, as Rhythm pointed out in one of his pieces on television, he said that if you go back to 25% equity of a savings, there's going to be a huge bull run for many, many years to come. So I'm going to stick my neck out and say the market going to make a new high in short order.
Okay. All right, Mr. Damani, always good, hearing your thoughts. Thanks so much for stopping by and speaking to us here on CNBC-TV18. I've always reached out to you for blessings in the last few years, and I'm happy that my first Muhurat trading, I got a chance to converse with you. Good speaking to you, and looking forward to chatting up with you rather
Always
soon.
a privilege. Thank you.
All right. Well, on that note, though, we'll slip into a short break. But as we do that, here's some opinion on the markets from Shankar Sharma, who remains optimistic on the Indian markets. Let's hear him out and come right back.
I think this is a genuine decoupling. I hate to use this word because it was badly misused, 12, 13 years back in the 2008-9 crisis. But I think this time it is for real. I think the decoupling of India versus the rest of the world is genuine. Therefore, the short answer to your question is that I remain extremely optimistic on India, and I remain very, very optimistic within India on the smaller cap end of the market.
Namaskar. CNBC has always led Indian capital markets with its news and views. And all of us are used to watching it from morning to night. I take this opportunity to thank all the viewers of CNBC. A happy Diwali and prosperous Hindu New Year 2079. As you are all aware, in stock markets we follow Vikram Samvat. This is a tradition, and it's an Indian lunar calendar which we follow. And this is the new year starts on the next day of Diwali, and that's where I wish all the viewers happy Diwali and prosperous New Year. CNBC and NSE have always worked together to create investor awareness and ensure that investors are taken to the right direction so that they are motivated to invest.
Well, welcome back. You're with us here on Muhurat programming. And I mean, if you've joining us just now, here's wishing all of you, your families, a very happy, healthy, prosperous Diwali from all of us here at CNBC-TV18. You heard sort of Ramesh Damani earlier, basically telling us that expect new highs in the market in short order, his words, not mine. Let's get some more perspective in. Atul Suri of Marathon Trends is here in our studios. Atul, it's a pleasure. Great to have you with us here. Happy Diwali.
Awesome. Thanks a lot.
Thanks so much you could make it today.
Definitely.
And Samir Arora of Helios Capital is also joining in. Samir, it's a pleasure. Thank you very much. Great to have you with us here. Happy Diwali from all of us here. To you, your family, your team. Thank you so much. Samir,
happy Diwali to everyone, to the viewers. Yes.
Sorry, what is that background, Samir? Is that Singapore? That is...
Yeah, it's Singapore. I got a new background for you because otherwise all the old boring background you have seen.
It's looking festive. It's looking lit up. It's looking Diwali. So, perfect.
But Samir, tell us, how are the card parties in Singapore? I'm sure this year it must be full-blown.
Yeah, but I walk out by the time these guys start card parties because I am used to bigger levels of speculation in my market. So I don't like these. Seriously, I don't play. They just look trivial to me.
Okay. Teen patti or...
But that's what fund manager makes you. I don't
think Sonia's a cards person.
I've never played a single game, but nowadays, I mean, this year it's been full-blown, right? The kind of celebrations. But Samir, how are you feeling about the markets? I mean, things have been rollicking, and we were just discussing how Atul has a very aggressive target. Atul, what's your target? 21,000 on the Nifty?
That's not very aggressive, 22%.
22% upside. Samir, are you in the same boat?
I am in similar group in the sense it depends on how many days or months he has for this target. But in 1 year, if we can outperform China 8% in a day sort of today.
Oh, wow.
So you can imagine where India is relative to our peer group. And I think India will do well. We just need the world to stabilize. And I think the US is already a little bit stabilizing, but definitely in next 2-3 months it will. And then all these targets can be met plus minus 6-8 months.
Okay, all right, Samir, hang on. Atul, first of all, greetings, season's greetings to you, your family. Thanks for coming down. Well, 21,500, and you're saying it's not very aggressive. I mean,
see, Nigel, what happens is that if you look at the year gone by, India has probably been one of the best performing markets.
Absolutely.
And I've always believed that stocks that fall less in falling markets are leaders of the next bull market. So if you look at the year gone by, I mean, barring, I think, Saudi and Israel, due to specific reasons, India has done very, very well.
Right.
So I think that we are not very far from lifetime highs, which is what, 4% or so from there.
Right.
Number two is that when I look at the composition, the sectors that are participating, they are very different from what has led the market or supported the market for last 10 years. It's not those export-oriented, defensive kind of plays. Last quarter, I got very, very bullish on capital goods. And I think when capital goods move, it is signaling to a bigger industrial play. If you look at the banking results, especially the industrial-facing banks, we are work in progress, you'll find the kind of numbers that are playing out. And what makes me most bullish, of course, that's predictive, is the way commodities are going. One big problem for a lot of Indian corporates is the pressure, margin pressures. But when I look at commodities, I look at crude. I mean, let's look at that. It's around 90, 91 Brent or thereabouts. I personally think that it will be substantially low and people will be shocked. So I think that things are playing out for India. We have relatively fallen less, but as things stabilize globally, and globally, mind you, the oversold nature, the readings that I see, whether it's S&P 500, are almost something you saw at 2008 bottoms or 2020 bottoms. So I don't think markets are going to really again, crash out from here. Even if markets stabilize, play out slowly, it's not going to be V-shaped. What we are used to seeing in a decade, because we don't have that flush of liquidity coming. We will be 2 steps forward, 1 step back. It will be calibrated. But I think that India will relatively outperform.
Atul, but if you're going to head higher, and as you said, the industrials, capex theme as well is coming back to life, the banks have to perform. Do you have a target on the Nifty bank itself?
No, I think that we could see around a 20. See, as I said, it's a 22% kind of move on the Nifty. I think it's around 26 or so. Percent. So there is a 4% outperformance. But again, even in banking, I feel, Nigel, this is not going to be a year of across the board, all sectors. As I said, it's not a liquidity gush. Globally, when money is going to be tight, you're going to be choosy. Whether it is going to be at a macro, at a country level, not all countries are going to do well. Just as Samir pointed out, look what happened to Hong Kong today. It's in a different space altogether. It's a different global market. I think even industries are going to be very, very differentiated. And even among industries, stocks are going to behave differently. So in a time when there was plenty of liquidity, like the ETF kind of play, everything went up. I think that this is going to be the year when managed funds or active fund managers are going to far outperform the indices.
The era of ETFs and passive.
I think so. I think the swing is going to happen towards
the other side, active fund management. Discerning.
Yeah.
Samir, sorry, just to pick up on China, you're closer to China than we are also. I mean, in terms of geography, where you are. What happened? President Xi was president last week. He's president now, but markets don't like it. So the question...
Well, they don't like the style.
Yeah. No, is it relevant for India? Is it going to accelerate this TINA of sentiment amongst foreign investors within emerging markets in a positive way for India? Yeah.
So, I wrote in my last letter to these guys that people who are putting money into China are the sort of the best example of the Stockholm syndrome, where you fall in love with your kidnapper or the guy who's abusing you and manipulating you. Because the performance that they've had, since 1992, the returns are negative. And today, I think Hong Kong is at 15-year low. So first of all, you can also imagine when we say invest for the long term and time is important, you can be in markets like Japan in the 90s or in Hong Kong for the last 15 years or China since 1992. So never think that everything is so straightforward. But it is India's time right now because of the frustration and the pain that people would have had in China. And in the end of the day, these fund managers don't say that, oh, we don't like China, so we'll return the money. They will find another story. And the story that fits right now beautifully is India, because it is A, benefiting from the China plus one, both from corporates and from investors, and B, doing well on its own, and C, having dealt with dignity this year, the flows of foreign investors. So whenever the foreign investors come back, and I think they will come back by Jan, Feb, because A, New Year always makes them, reset their allocations and all that. And by that time, the US interest rates would be out of the way. And then we can perform in absolute what this year we have done in relative terms.
So we're trying to get a lot of themes out of our, our market guests, right, Samir? And one thing that we've noticed is that a lot of people are now going contra on IT stocks. So Ramesh Damani was just telling us a while back. And to be fair, this month has been good for IT. I mean, HCL Tech, Infosys are all up about 10% this month. Do you think this is the space to be for the next
No, I don't
months?
think so. And by the way, you didn't hear Ramesh fully saying if you want a 5 to 7 year story, well, I'm interested in a 1 to 3 year story first, and then I'll go for 5 to 7. So simultaneously, we can't say that India will outperform and India is doing well and India is ahead of every other market, and say that then we'll choose a sector which is most linked to those markets. So when we separately say that India is in a better situation relatively because we have less interaction with the world, we have less supply chain, we have less this, then we should seek stocks which are more related to those themes. So we are see, if India goes up 22%, everything will do well. But if the market goes up 22, then unfortunately fund managers have to go up 25 or at least whatever. So therefore, we have to look for relative performers. And I think that also, if you look at this year, I mean, this month, people were looking at last quarter's results and saying those results were very good. Obviously, nobody's saying that the US has slowed down right now. The whole story is that the US has not slowed down, but the Federal Reserve thinks it should slow down so that inflation can be brought under control. Therefore, looking at last quarter has absolutely no connection with what the sort of the bet is in some sense. But in any case, I think everybody does well. Everything might do well if the market is up. But we think that non-IT will do better than IT.
All right, non-IT will do better. By the way, there may be Diwali lights in 10 Downing Street as well in London, right? I think the news is coming in just now that Rishi Sunak is confirmed to be the next Prime Minister of UK. And this is after, I mean, there was a candidate called Penny Mordaunt who withdrew from the Conservative Party leadership contest. The former Prime Minister Boris Johnson, of course, withdrew. And now it leaves Rishi Sunak right there as the man for the top job in the UK. I mean, I think he's perceived in a pretty good way by, he's considered market-friendly, fiscally responsible. I mean, all of the right things. He checks all the boxes. And maybe this now puts this entire UK saga, and what a saga it has been, last month and a half or so, right? 3
leaders in what, less than 2 months, right?
And the markets, right? I mean, they've been absolutely, the bond market in the UK, the currency. It's obviously not had too much contagion impact, but maybe some stability. Samir, any thoughts quickly?
The thought is, let's call him an Indian. Even though he's basically from Africa or wherever his parents. But the thing is, if you look at India, this Diwali is really going well. Yesterday, we defeated Pakistan. Today, we beat China by 8% in a day. An Indian origin fellow has become UK Prime Minister. It's a good start.
Okay, so British Asian, right, as he calls himself. So you want to rechristen him. But I mean, he's a former hedge fund boss. So I guess he'll know what to do with the economic crisis in UK at least. We can hope for that.
That is assuming that hedge fund bosses know what to do.
That's a big one.
That's tongue-in-cheek, Samir.
Oh, no offense taken, Samir, for you. But Atul, how are you feeling about some of these spaces, right? I mean, we spoke about banks, IT. Absolutely. The big trade last year was go short on IT and go long on banks. Right. What's the big trade next year?
No, I think that things have been evolving. You know, I feel that one theme, right, it's been my favorite for, I think, since 2020 has been specialty chemicals. And I think it's still playing out. I think it's a big mega trend. I've been telling people, just as IT was a renaissance industry, I think this sector is going to play out. And the way I see commodity prices correcting, I think that the margin pressures we are seeing in the short term, which should get elevated. I think last quarter, capital goods really played out and became an overweight theme. I would say industry-facing banks is what's really working out. And we have selective exposure to defense. Ramesh spoke about it earlier. I think that also has done very well. So again, it seems that the portfolio is more domestic-facing. Yeah. And you know, sectors like IT and pharma, which really dominated 2021, have actually been underweight. So it seems to be more internal growth. Even some of the consumption stocks are doing very well. So the portfolio is changing. The themes are more domestic than global. And that's what the results are pointing out. That's what leadership is pointing out. That's what prices are pointing out. So I guess that's where we are, because ultimately we are there to play the trends. As Samir said, you know, 5 years, 7 years, it's nice to talk about. But as portfolio managers, it's 1 year and 2 years, and that's a reality because that's what most of the clients want.
Atul, if you could squeeze in a couple of names as well. Specialty chemicals has done phenomenally, you know, in the last couple of years or so. Some of them have come off the top, but as you say, that's the big trend, and there's plenty of headroom out there. You want to squeeze in a couple of names in there?
I would avoid because of compliance issues, and you know, Nigel, they're a part of my portfolio. Okay. But I feel that there are a lot of plays. I mean, defense, you know, there are just a handful of names there. I think that looks very interesting. And they still are very cheap after having almost moved up. And it's not just about indigenization at India level. If you look at the globe, post this Russia-Ukraine thing, countries are understanding they need to have self-sufficiency as far as defense, equipment, production goes. And I think India's playing out very well.
All right. Well, Sameer and Atul, thank you so much for
Thanks
joining us and taking the time out this Diwali to speak to CNBC TV18. Hope you folks and your families have the best year yet. We've been through challenging times, right? All of us together. I think for the last, 2 decades, we've been speaking to each other and we've been through anything and everything, whether it was a recession, a war, and here we are, sitting well and healthy, and hope that continues for the days to come. Thanks a lot, folks.
Thank you very much. Happy Diwali.
Happy Diwali. All right, let's take a quick break. On the other side, we'll be back more on the markets, which are doing exceptionally well, and Samvat 2079 getting off with a big bang.
I'd like to wish all the viewers and team at CNBC TV18 very happy Diwali and a very prosperous new year going forward.
Welcome back. You're tuned into the special Muhurat trading session. Well, a good time to get you some market opinion coming your way. Kenneth Andrat of Old Bridge Capital is betting on the agri-commodity businesses. He also likes the QSR space and the alcoholic beverage space as well. Here's a snippet of the conversation he had with Prashant earlier this week.
This is the first time, I think, one of the very few times since India's independence, that virtually all crop prices are trading higher than MSPs. Okay. This is the first time that we've seen in history, that you've got a large industrialization of agriculture. When I say industrialization, agriculture moving into industrial products, right? You've seen it through the ethanol policy. You will see it getting converted into plastic or single-use plastic over the course of the next year, 2 years, or 3 years. So you've got a new use or new demand pattern emerging for agriculture, and that's kept that along with relatively weak or not favorable monsoons has kept supply reasonably tight.
Right.
Okay. New demand and supply tight, and that's created what we have today.
Right.
I don't ever think that commodity prices will ever be deflationary for a long period of time. One is you've got a population growth.
And these are global commodities.
Yeah, global commodities I'm talking about. Once you got demand getting created from another stream of from another industry completely. Plus you've got food consumption going up. Plus you have protein consumption actually moving higher, and all three of them are going to keep prices elevated. Now, when prices get elevated, I mean, let's look at it from a hard commodity standpoint. When say steel does well, the value chain works all the way down to iron ore and coke. So when agricultural commodity prices do well, what happens on the entire value chain? So there are elements of everything that is falling into place. Now we've been holding this since 2016, and the fundamentals of this argument tend to get a little better by every year. So I'm not too worried about it. Policy interventions always come through because at the end of the day, you will necessarily need to control pricing because of inflation. But if there is no supply, there is always going to be a challenge.
This position in the agriculture space you've been holding since 2016.
16 always.
And you're happy to continue to hold.
Well, valuations are fair. It's an industry which is consolidated. There is no second or there is no third manufacturer of any of these products out there, and even the converters are getting more consolidated than they have ever been before.
Kenneth, the other space is consumption, and you own a QSR company in your portfolio, you own a liquor company in your portfolio, so you like that space, I mean, urban consumption, really. Just sort of explain that to us.
I think we're just coming back on the fact that the urbanization will pick up a lot of pace at this point in time, and you just have to get companies with and the sense is we just get companies in the right format, with the right expansion plan and with the right cost structures. Okay, so one of the biggest cost structures, I mean, if you look at most of the QSRs, one of the biggest cost structures is royalty payments.
Sure.
Okay, yes. So if you can actually align your portfolio to take that 5% to 7% cost out, you probably got a business which does have the pricing advantage compared to everyone else. And these businesses are free cash flow. They got their marketplace, their free cash flow. All expansions are through their own cash flows or through their own balance sheet, and no dependence on any external resource. So we're in infancy in that industry, and globally that industry has become significantly large. Right. So there will be an expansion of that one particular place, and it could get reasonably large. A similar thing with the alcohol beverages companies, very consolidated place, enormous barriers to entry, both in terms of distribution and making the product price available. So all of these companies come in with their individual structures, wherein it's extremely difficult for competition to come in and
disrupt
that business.
Take away market share.
So if you can get all of these at the right price points, you go back about 3 years and all of these were there. You go back to IPO stages, and when these businesses corrected, they were all there. I think you just have to wait your time on all of these companies, accumulate large amounts, and just wait for them to monetize it all.
Time in the market, I mean, across sectors, across market participants that we're getting to you, keep the eye on the ball and stay invested for the longer run. That's the message coming through. Well, let's cut across to my colleague Yash Jain, who's at the Bombay Stock Exchange, which is always, a hub of a lot of activity. Of course, we showed you shots earlier of the puja happening at the BSE, the oldest exchange in Asia, really. Yash, you have, someone who's been at the BSE for the puja, Mr. Choksi. I can see him for, 40, 50 years. And of course, you've got a few others with you as well. Happy Diwali to all of you.
Well, first of all, Prashant, a very happy Diwali to you guys in the studio, Prashant, Nigel, Sonia. And this place here, every Muhurat trading feels a little incomplete without being at this spot. And that is the BSE Convention Hall. And today we plan to do something little different. We have investors ranging across 3 generations, right, to give their piece of advice in terms of how their investment style has changed over the years. We have Kishan Bhai Ratilal Choksi. For people who don't know, that's KR Choksi. We'll start with the youngest member of this panel, that is Kishan Bhai. Kishan Bhai, you've seen multiple cycles, you've seen multiple new companies, new kinds of investors. For you, today, are you being forced to change your investment style to be relevant in this new market, or does the old trick still work?
No, basically, previously we were looking only at the Indian economy. Today we have to look at the world economy. You should have knowledge of Indian economy and the global economy. So the developments that are happening in India and in the world, that is affecting the corporate results. So you have to be more particular about your investment. So the knowledge of this industry is very much required, because if you select a company, then in what industry it is working, and if that industry is doing well, then your company that you have selected will give a good result.
That's the experience that Kishan Bhai brings, and even today when I go to his office, you'd be reading balance sheets, understanding companies, talking about what's happening in the globe and in India. We also have Uttam Bagri, the chairman of BSE Brokers Forum. Uttam, for you take some bits from Kishan Bhai's experience, some bits from what the new age investors are doing. How do you bring these two together to inculcate in your investment style?
So we have always been the sandwich generation, right? Bado ki bhi suno, bachcho ki bhi suno. But it's very interesting, because the generation of today, they are really digital natives. And the speed at which they respond to technology changes, the speed at which they change. They could be a lovely running business. Suddenly there's one scandal and the entire generation moves away so rapidly. And I studied in college when there was no internet.
Correct.
And look what we have here. So the entire business models are changing. If you have a great factory and if everything is running fine, suddenly you have a 3D printing technology and suddenly out of date. So the rate of change is so strong, and this is probably the biggest thing. So if I have a company which is doing very well, as on today, and seems to be doing will expect to do very well sometime down the line, you have to look a bit further in terms of technological change and the behavior of these guys, how they're going to, who are the final consumers. But we are a young country and still it is a young world. So that's one thing that we are taking care of. But Baki, the basic rules remain the same. And the fundamental rule which I have learned from the seniors is the quality of management.
Okay.
If there's a good guy in charge, if it's a good guy in charge of your office or my office of any organization, they find a way. So the first bet is on the management, and the next bet is probably on the sector and the business.
First bet on the management, next is the sector and the business. And you also spoke about looking forward. Well, who better to essentially talk to us about looking forward than the new set of investors who've come into the market. You consume businesses like Zomato, like so many of these policy bazaar, new age companies. What is the new investment style, understanding that you bring to this market?
So see, there are multiple ways that our generation invests in. One being that there's so much knowledge already given to them. Not too many people are actually jumping in and finding out what's actually happening in the company. You have multiple ways and tools where information is given to you. And you don't know what to rely on, and you end up relying on one of the many. So I feel that's a very immature way of looking at companies, because of which so many of these startup companies who've just got listed have seen that big boom because of the full euphoria. I personally believe in the more orthodox style of investing because I've seen money come only through that and not through anything else. Where we've been taught about large cap stocks and the stocks that have actually lasted and sustained the market for like 30, 40 years. Like you'll never see any of the big people like Tata's, Ambani's, HDFC ever shutting shop. You can never think of them also shutting shop. So might as well invest in companies that you know are never going to shut shop, rather than a new company that has just seen the market and not experienced it. And that's very risky for me when I see these startups coming and listing themselves. I'm more of a kind of guy who waits, sees whether they are ready for the market or not. And only once they are, that's when, okay, fine, here's my money, now you can take it and now you can grow.
Well, it's so important to hear that from a new age investor, that they want to assess businesses. But I guess important piece of advice coming from all three generations, I think somewhere it's about time also, which understanding fits well at what time, what company. Most crucial but interesting chat. Thank you so much, guys. With that, it's back to you guys in the studio.
Thank you so much, Yash. It was absolutely wonderful to see three generations of investors, and just goes to show that doesn't matter what age you are, this equity market is so inclusive that everyone can thrive here, right? Thanks a lot. And those are some pearls of wisdom coming in from three different generations, and so much passion in this market as well. But getting back, by the way, a lot of stocks are hitting fresh highs today. So befitting day for this market to rally like this. You have names like Axis Bank, Bank of Baroda, Nestle, Federal Bank, NHPC, all sitting at fresh 52-week highs as we speak. And if you're wondering how the Samvat session is going, it's crackling. Just like any firecracker that you see on the street today, the Lal Street is roaring. The Nifty is up 156 points and the Sensex up 540 points. But let's also get you some views on how you can approach the next 1 year. We have Credit Suisse's Neelkant Mishra, who's very bullish on the banking space. No surprises there, but let's listen into his views on the market. We'll head into a short commercial break and be back with more.
The recovery from the pandemic is likely better than had been feared, and therefore the pace at which the economy is operating right now is better than had been expected even 6 months back. The second is that from a medium-term perspective, there are several drivers of growth which did not exist or were much weaker in the previous cycles. So the most important being that the real estate inventory, the dwelling construction cycle is, I think, improving. I think the Indian participation in goods supply chains globally, there is a market share gain. So in electronics, in chemicals, in maybe even in apparel, in auto components. Now, the reason this matters is that even though the global goods supply chain is currently under a lot of stress, the market share gains are helping offset some of the impact even in the near term. And then you have significant improvements in infrastructure. So road freight is a lot easier to move now. And I think these kind of structural shifts matter a lot when you are thinking about the medium-term growth. But I think this bigger picture, are we going to be able to withstand a substantial global slowdown, is something that we should not overdo, in the sense that we will have an impact of the global goods slowdown. We are already seeing that. We will have an impact of the slowdown in capital inflows. Remember that we are still a current account deficit country. So if global capital flows are de-risking, there will be a growth impact on our economy. And also remember that our critical services sector has not yet started to slow down. Remember that US unemployment is still at only 3.5%. And it is reasonable to assume that unemployment there will go up, and that will also be another headwind to the economy. So we need to close our balance of payments deficit. We also will be affected by the interest rates that we have been hiking for the last 4 or 5 months. And so I think the economy will slow from here, right? The point we make in a note published today is that it is slowing from a much higher level than had been feared, and we should be able to hold on to a 7% growth rate.
How will it mean, earnings will pan out? The numbers I read for Nifty EPS is something like, 870, 815, 820 thereabouts, which is indicating more a 10-11% EPS growth for FY23. What are your numbers, and what would you look forward to in FY24 in terms of corporate earnings, whatever measure you want to use?
If I may say so, I don't think FY23 matters, other than for the market, that is, other than possibly setting a base for FY24. Because remember that when you are buying the market, or at least when I think about or advise people on whether to buy the market or not, you are buying for at least 12 months, right? You're not, there are people who make money on day trading. I don't think I have that skill. So I would rather look at, if I buy Nifty at 17,000, where will I be on price to earnings 1 year out? And I think that the 1 year out price to earnings is very likely to be sub 17. So as we think about 12-month forward earnings in September, October next year, we'll have half a year of FY24, half a year of FY25. I know it looks really far out and almost unforecastable, but you know what? That is what will drive the market. How FY24 and 25 earnings move. And I think that the 12-month forward, as we are sitting in September, October next year, will be upwards of 1,000. And therefore, I think that, and there is a fair degree of resilience there. So if you see the very early season, early result season right now, but bank earnings are going up.
Absolutely.
And the incremental EPS financials matter a lot.
Isn't it time then to buy PSU banks? Would the alpha lie there?
I have some sympathy for that argument. We have been positive PSU banks and overweight PSU banks for a while now, but I'm still apprehensive, and perhaps this is why sometimes age can be a deterrent, of going too far down the quality curve among PSU banks.
Okay.
So we have a few PSU banks in our in the recommended list, and one in our model portfolio. So no, I think that at least the good quality ones we should definitely consider. The ones who are outside the, say, top 2-3 in terms of return on assets and past track record, I would still be a bit cautious on, though, but I can see why some people would find them interesting.
Welcome back. Well, our markets have come off a little bit from the top. We were at around 17,780 at the start of the trading session. We have come off close to around 60 points on the Nifty. It's still a good trading session. We're still up close to around 140, 150 odd points. The Nifty Bank as well, that as well has given up close to around 150 points from the day's top. And the breadth of the market, well, it seems mid-cap index on the whole, it's lagging the frontline indices because that's up close to around 0.5%, while we have the headline index, that's the Nifty, Sensex, and the Nifty Bank, up close to around 1% or thereabouts. Which are the stocks that are gaining in today's trading session? Nestle, that's one of the top gainers, and the big boys, you know, ICICI Bank as well as HDFC, both of them. ICICI Bank, by the way, is reacting to its numbers. So that's up 2.5%, been one of the stars of the past year. HDFC as well as piling in the gains, and L&T as well, doing pretty well. On the flip side, HUL, that's the only Nifty stock that's underperforming big time, down close to around 3% odd. From the broader markets, plenty of stocks actually are moving around. MCX, that's one of the top gainers, up close to around 4%, while AB Capital, that's up, and United Spirits, I think it's Prashant's to blame. Up close to around 2% or thereabouts.
It's Diwali, guys. Everyone is high-spirited on Diwali, right?
I just wanted to knock it back to Prashant. I don't mind taking the entire blame.
It's a good day to have a good day for United Spirits. All right. But, I mean, for the market overall, right, it's up almost 150 odd points. And we have lots of opinion that we got through the course of the week.
Well, that's right. Motilal Oswal's Ramdev Agarwal believes that there are multiple opportunities in the banking space, while Inam Group's Manish Shokhani believes that HDFC Bank's recent underperformance presents a very good entry point. Let's hear them out.
Retail investors have kept the market alive for the last 12 months. So we are kind of very large in retail. So sentiment has been very upbeat. We just had retail conference. It was stunning. The sentiment, the participation, the size. So I think I'm doing fine. And let me wish all the viewers a very happy Diwali and a prosperous new Samvat year.
If last Diwali, someone would have told us that by the time next Diwali comes through, we'll be down just about 5%, given a raging pandemic, you know, decade-high inflation and slowing growth, people would have taken it with both hands. Do you feel the same?
I think so. So first of all, let me also wish everyone a happy Diwali. And just to take on from what he said, if you sit back and not just about the money and the outperformance of India, just think if you were a girl in Afghanistan or in Iran, or if you were a person in Pakistan going through floods, or you were someone trying to look for petrol in Sri Lanka or in Germany or in... So you have a lot to be grateful about, beyond the fact that we've reopened and come back. So it's not just about money, but let's just enter this year with a sense of gratitude. And then coming to your point, obviously, if you had said, you know, oil will be $130, FII sales will be 30 billion, there will be a war in the world, we would have said, sell the market and run away. And here we are sitting with market probably, what, 2% up or down over the last 12 months. So, sure, a lot to be grateful about.
Ramdevji, I wanted to ask, get straight to the point, you know, what are the sectors to watch from here on? Some of the beaten down sectors are coming back into action purely because of the valuation headroom. Yes. So you tell me, which ones do you like?
Yeah, so you can do your numbers, but the most headed sectors and which are of some significance is, of course, one full group is that PSU. Under PSU, what of 45, 50 companies are there. That has been kind of a big disappointment. And there again, you know, everything is not flying. To some extent, I think defense has been their monopoly. So defenses, some of the companies are very asset light, very high ROE, consistent companies. At times, cash flows are challenged because government fiscal deficit at times extends to their balance sheet.
But those stocks have run up a lot as well, right?
But I think that's a theme now, in the sense that maybe it is popular right now. But other than that, say, a lot of large companies are there. They are also trading at single-digit P multiples. Coal India, ONGC, Oil India, HP, BP. I mean, entire energy basket. And you know, what world is going through. So what will happen, I don't know. But these are all hated companies.
ESG and all is out of the window now. I mean,
Coal India and ITC were big performers last year.
Yeah, ITC has now come back, but that's a private sector. So that's one segment. I mean, I think you have to find some large companies which are not done well because the wind is going from one direction to other, and market is trying to find within financials what are the hated ones. So hated ones are PSU banks. So they can be a good, maybe not a very long-term investing, but as a trade, you know, you buy it less than one book. Like most of the banks are about 0.7, 0.8 books, and except SBI. SBI is a little premium. So leader of the pack is SBI. So I think, so that's a very large, so you like financials, and in that, not so favored is the PSU banks. So like that, there are opportunities. your real estate, after I think 12, 13 years, 14 years, they are coming out of the slumber. And the last 12 months only it has just picked up. Stocks have picked up a lot. But still, like say DLF, if you call it as a very large this thing. So I remember in 2007-8, it had gone to, after listing, it had gone to about 1100-1200 rupees. Even with everything, all clean up, and still it are about 350-400 types. So what I'm saying is that sector still has that runway, and it is just coming out of slumber.
Well, just a quick check on the volume chart before we start winding down today's action. On the NSE, the cash market volumes around 11,500 crores. Or last year, well, it was around these levels. The market as well were at these levels. So we're pretty much in line. Quite an active trading session, though I think, feel by the time we do see the closing and various trades get squared off, we should be roughly in the vicinity of around 11,800 odd crores. But guys, let's wind down the market today.
Oh, absolutely. I mean, it's going to be a good Muhurat session. 160 points, 166 points higher at 17,737. The Nifty Bank will also end 1.33% higher. I mean, actually, as far as sectors go, and I think the Bank Nifty is the sort of top performing sector once again. It kind of picks up from where it left off last week. Actually, Nifty Bank, PSU, Private Bank Index, nothing comes close. The small cap index did well with a 1% gain. We'll get to constituents in a bit. The metals space, which was kind of bashed up last week, that was up about 0.8% as well. I think most sectors, not all, but most sectors ending in the green. The FMCG index ending slightly, marginally in the negative today, but not by anything substantial. HUL perhaps was the problem area there. Large cap stocks, ICICI Bank, the clear leader, 3% gains. Nestle, which ends about 2.5% higher. State Bank of India with a 2% pop. 3 stocks on the Nifty with gains of more than 2%. And the only noticeable loser was Lever, which ends down 3% at about 25.73. Sonia.
Absolutely. In the mid-caps as well, right? The evening belonged to the banks. No two ways about that. Bank of Maharashtra, IDBI Bank, Federal Bank, up about 1.5 to 2%. You had defense stocks. That's been the big mover from last summer to now. So BEL up almost 1.5%. You had a couple of others. Zomato, by the way, saw a bit of a up move there. Max India had a huge run today, 17% higher on Max India. JNK Bank, RVNL, NHPC are a couple of other stocks that did pretty well today. And on the downside, something like a Yes Bank and RBL Bank were down in the red. You had Union Bank that was also a tad bit soft today. So not looking that great. And Bombay Dyeing under a bit of pressure, down almost about 12.5% on Bombay Dyeing. But largely you'd have to say spectacular start to the news somewhat. A great day of trade and ending 160 points higher.
Well, that's right. I just want to point out one stock. The Tata Motors stock is a little higher, but the Tata Motors DVR stock is up 10%. Now, there's a big move out there. Maybe someone is playing that could be some narrowing. We have seen that in the past, but I just thought we'll spot that out. Big outperformance from the Tata Motors DVR as well, and massive volumes out there.
Okay, so lots happening on this first Samvat, but we've wrapped up what has been a spectacular start to the new Samvat, and hopefully better days yet for the Indian equity markets. But we also have an important political development where Rishi Sunak will now be the first Indian origin UK Prime Minister. He's the third Prime Minister UK has had in the last 7 months. So it's been a very volatile time over there. But we have with us Sanjay Suri joining in live to tell us, he's my colleague, he's joining in with the latest on all that's taken place over there. Sanjay, it's been a hectic time, but now finally a decision has been made.
Well, this is history made here in ways that were quite unimaginable. Look at the Parliament House here. For centuries, it sent one Governor General after another, then one Viceroy after another to rule India. Who could then have imagined that an Indian or Indian origin person would come as Prime Minister and be sitting in this Parliament here as Prime Minister to lead the government? But of course, we are looking at a very new Britain that is unrecognizably different from that Britain, and a great moment for Rishi Sunak, a great Diwali for Rishi Sunak. What better day for a prize such as this and for a gift such as this? And really, without getting into too much sentimental excitement. It is a remarkable gift indeed for Rishi Sunak, for the entire Indian community here, for the Indian community everywhere, and also not least for Britain itself, for having built up inclusive institutions that could make such an appointment and such an election possible.
Hey, Sanjay, thanks a lot for that. So we have a new UK Prime Minister, Rishi Sunak, the first British Asian Prime Minister. Sanjay, I forgot to wish you Happy Diwali. So Happy Diwali to you and to your family as well. Thanks a lot for joining in and giving us that update.
And to you and to everyone.
All right. Well, there's lots to celebrate, actually, right here in India, right? But for the market as well, we ended the day with some handsome gains. We actually got you a lot of views from different experts across the market spectrum. And here's an exclusive excerpt of an interesting discussion that we had with Navneet Munot, the Managing Director and CEO of HDFC AMC, on the market sentiment at large, his outlook from this Diwali to next, and how retail investors should approach this market. Take a look.
We have come a long way, no doubt about it. And look at the policymakers globally versus the policymakers in India. They are so focused on growth, on ease of doing business, on ease of living for their citizens. And it's a coincidence that India is taking leadership of G20 at an opportune time. Look at the leadership in the world. I think they need India to have that optimistic view about the future.
The retail inflows into funds like HDFC AMC has been so strong, right? Last couple of years, Navneet, you would agree. And that has remained rock solid. SIPs, for example, last month were hit another new high. So that is a solid part which kind of is supporting the market, isn't it?
So you can take a lot of credit for that. I think media has played a big role. Our regulators have played a big role. Policymakers have played a big role. Right. And so are our partners. And I think credit to industry. The resilience retail investors have provided to our market is something very new. So historically, foreign investors have always been positive on India for two reasons. One is that the macro story has always been very strong, long-term sustainable growth story. At micro level, you always get, on a bottom-up basis, several stocks across variety of sectors to choose from. World-class companies, high-quality governance, and the growth prospects. This year, Indian equity market, Indian bond market, Indian currency market would be one of the least volatile, if not the least volatile markets in the world.
Actually, to be fair, you know, if last Diwali, anyone would have told us that we would have had just a 5% fall amidst what a raging pandemic, 4-decade high inflation, slow growth across the world, central banks hiking rate, people would have taken it with both hands, right?
And the biggest war in the heart of Europe since World War II.
And this huge energy crisis.
I mean, we can go on, absolutely.
But,
hundreds of basis point of increase in global interest rates. Had I told you this year, or maybe at the beginning of the year, you would have thought that markets would be substantially lower.
So, you know, if you map between last Samvat and now, right, the consumption piece has done very well, whether it's FMCG, whether it's autos, and you're seeing it. I mean, you step out of your house and you'll see, especially in premiumization, right? Premium cars, houses are being sold. Do you think this is a trend that can continue?
So both, I mean, if you look at all the high frequency indicators, some of them you talked about, or you had the railway freight, GST collection, I mean, air traffic, so on and so forth. Or you look at anecdotal evidence, I mean, you travel and you feel that buzz. I think a lot of people say when they come back from Europe or other parts of the world, I think we get a little gloomy about what's happening in the world. But when you come back, you see a sense of positivity here. I think all the global investors or global visitors who have traveled to India. So I think if we split consumption, so let's say overall economy, 2/3 consumption, 1/3 investment. On the 2/3 consumption part, if you split between the urban consumption and the rural consumption. On the urban consumption side, because wages have gone up, and of course, there's a lot of pent-up demand post-pandemic. So I think we are seeing that consumption coming back. On the rural side, monsoon has been pretty decent. Of course, the spatial distribution has not been as great. But we expect over a period of time, I think that should also do well.
So the best way to play both is actually banking and financial services. Both feed into that, isn't it?
Yeah, that's one of the better way. And again, I mean, talking about that sector, and look at from a credit quality perspective, they haven't seen as good a time in last several years. Credit growth has never been as high as it is today, and I think both, as we said, household and the corporate side, there's still a lot of growth for credit growth over the next several years.
All right, that's Bossman at HDFC Mutual Fund, AMC. Let's also get you an exclusive conversation we had with Aditya Birla Sun Life AMC's Mahesh Patil, Kotak AMC's Nilesh Shah, and S. Narain of ICICI Prudential Asset Management Company. Listen in to their wisdom.
We are cautiously optimistic. We believe next year will be just like a Diwali day, lots of celebrations, and in between there will be loud burst. The Russia-Ukraine situation, the Fed rates trajectory, the global inflation problem, and such kind of topics will continue to impact our market. Our markets and our economy are part of global economy, so we won't get decoupled. But certainly we will be impacted less compared to what others are. One advantage as well as challenge for us is that we are trading, while at our historical average valuation, we are at a significant premium to our peer group. So we need money which is coming not with a one-year horizon, but with a 5-year horizon. On a one-year horizon, we are the reasonably expensive emerging market. On a 5-year horizon, we are the cheapest emerging market. So there will be tussle between events happening versus our fundamentals, short-term valuation versus long-term valuation, and eventually we'll have celebrations.
Mahesh, what's your big call for the year? As we start the new year, what would be your big call?
So I would say that, India in this period has been able to really show to the world that, we have arrived in a sense, right? We have seen, despite the global macro instability, our overall, not only the markets, but even our growth, if you look at interest rate, inflation, has really behaved in a much normal manner. And again, I would agree with Narain. I think over the years, what this government has done, I mean, the true benefit of reforms, which started around 7 years back, I think we are seeing that benefit of that now coming through. Unfortunately, we are in a period where there is going to be a slowdown, high interest rates, lower liquidity, and that would take away some of the stink in terms of the revival, what we have seen in the economy. But I think the domestic growth, even in this year, if you look at not only GDP growth, but the corporate, I think, balance sheets and the corporate growth has been very strong. So during the last COVID period, we have seen many Indian corporates have been able to actually improve their productivity, efficiency gains, and some of them have sustained. So actually, we have seen the overall return on capital and ROE of Indian companies has gone up significantly. I mean, pre-COVID, that number was around 13-14%, which has gone to around 16-17%. So I think in that context, I think in this kind of a difficult year, if we're able to do that, then I think we should see when things normalize, and they will probably 6 downwards down the line, then I think it's going to be India's really story which will play out. And there are enough structural drivers in place, be it the discretionary consumption, which I think India economy is at an inflection point where the per capita GDP is now crossing around 2,700. Beyond $3,000, we see a lot of discretionary consumption items starts to move up.
Now, Naren, the one big call that you had made, and that really stood out for me was about 6 months back when you said that commodity producers rally is overdone, and now it's time to look at commodity consumers. Is that still on, or do you think that's now almost coming to an end?
It is still on, because finally at the end of the day, unless China is going to send a big stimulus to the economy, and I don't think they're ever going to stimulate the economy on the scale what they did in 2010, 11, 12. You're not going to see a big global commodity rally. Of course, when China abandons zero COVID and goes back to a normal environment, you're going to have one relief rally in commodities.
Well, on that note, we'll wrap up on this Muhurat trading special. Stay tuned. Manisha Gupta joins in next with the Commodities Trade.